bring this GDP to your marketplace with Robert Omotunde, who is the head of research at Afrinvest. Good morning. It's good to have you.
Thank you, Boason.
Let's have this to the 0.83% GDP growth, which this administration made a very quick response and said, this shows growth, this shows we're on trajectory, and we're going to see more. Give us your first word on this.
Well, I think the government will always attribute whatever happens in the economy to the activities they're doing. But as economists we know that there's a lag between the time the actions of government begin to translate into growth within the economy. So this government is doing well on a number of fronts, but I'm not particularly sure that the results of GDP that was released for 2017 is showing some of the activities of government in 2017 because of the time lag. Perhaps we begin to see much of that in 2018, but in the agri space, there's been a continuum in government in the agri space from the last administration to this current administration. Agri sector has garnered a lot of momentum, momentum and attention, and that is beginning to pan out. Even in the current GDP figure, if you analyze across the key sectors, agri, manufacturing, and services, agri sector accounted for the largest chunk of growth, that was recorded. Again, it's kudos to this administration, and of course, what the trajectory that has been set since the last administration.
Drill this down to the financial services sector.
Yep.
For us. And the numbers doesn't look particularly very impressive.
Well, if you analyze the GDP from 2016, remember the economy slipped into recession in 2016.
In second quarter.
Yeah, in second quarter of 2016. But you saw that, in fact, from the third quarter of 2016, the financial services sector rebounded. So the sector recorded consistent growth, up until third quarter of 2017, when the sector shared, some points in terms of growth that was recorded, and of course what we saw in Q4 was a rebound, so technically you could say that the financial services sector got out of recession in Q3 2016. Yes. But again, there was a decline in 2017, third quarter, and there's a rebound at this point, And what you can likely attribute to that, that sector is called financial services and then insurance, All the financial service activities are grouped together, like you mentioned, the banks, other financial services, they are all grouped except the insurance sector.
This annual growth of about 1.26%, where I grew out of a negative 4.54, but still 1.26% is considered not a very dramatic change, if you put it that way, if you went down 4.54% and you're coming back with 1.2%.
Well, you can say that, but again, what we would analyze for the financial service sector is the fact that you've seen this consistency in terms of activities that have been going on in the sector. Like I mentioned, the economy was comfortably, enjoying the recession of 2016, and this sector managed to, come out. Of course, the activities of the banking sector, cannot actually be dissociated from that, because of the resilience of that sector. You've seen that even though the economy was going through challenges because of exchange rate issues, most of the banks were able to translate this into positive because of the diversification of their, asset base. You saw most of them having, their assets either denominated in foreign currency. And that actually, even though it was supposed to be a drag, actually boosted most of the numbers which they recorded and, of course, increased the level of activity within the sector. That is not to say that there are no challenges, that the sector is facing.
We'll talk about the challenge, but again, if you look at 2017, we have the I&E window in April, and we're close to 1 year anniversary of that. But again, if you look at the contribution of finance and insurance to the real GDP, 2.84%, not significantly lower than the previous 2.89%.
Well, for us, you can say that it's a positive, because in the real sense, the financial sector is supposed to serve as a vehicle for intermediation of real economic activities, So if the sector is actually doing its bit in terms of just facilitating economic activities taking place within the economy, then, of course, you are not expecting it to contribute a large chunk, into GDP. It is commendable to say that when you analyze, real activities still account for the bulk. Like you mentioned, it's just on the average about 3%, that the sector has contributed to economic growth, to GDP. So that's not to say that the sector cannot still do more in terms of contribution. You know, we have a lot of unbanked individuals who are still, within the country. There are a lot of innovative products that are being put in place in different spheres of the financial sector. You know, talk about banking, talk about insurance, even other financial investment banks. You know, you see a lot of activities, coming into place, even on the stock exchange. The number of retail players in the stock exchange is still very minimal, and there are activities taking place every day, and even innovations to ensure that people get more aware, of all these financial products, and now they can take advantage of them.
I'm not sure you're surprised about insurance. Under finance and insurance sector contracting a massive 15.71% from just 1.86%. So the shrink that we have, and that's just there on the TV screen that you can see that, that's a massive contraction, almost with a meltdown from about 2%, 1.86% in Q4 of 2016 to 15.71% of last year. So insurance is still a sector to wake up.
Now, the insurance sector is, there's a peculiarity of that sector, and when you're measuring economic activities from the perspective of insurance business, most contracts, the premium that are charged on most contracts will remain, perhaps at the level they were before the economy slipped into recession. So what you've seen now is contraction in real activities taking place, within that space. We're still talking about the level of insurance penetration, which is very low. For Nigeria, we have it below 1%, in fact, below 0.5%. You do a comparison with a country like South Africa, you're likely to get a ratio closer to 10%. So there's a lot of untapped, potentials of that particular sector. Now, to now top it will be that the activities that are reported by the Q3 GDP is still suggestive of perhaps some of the activities that have been taking place even before the recession now reducing in terms of the quantum of activities, that are reported.
In 2017 that followed.
And that's what would have accounted for that massive
Yeah,
drop.
well, again, maybe some folks, because if you are just getting out of recession and folks were laying off staff and things like that, you likely tell the insurance man, come back tomorrow. We can't just, we don't have the insurance ready.
More like it.
to pay. We haven't paid salaries yet. If I haven't paid salaries, I'm not sure I can pay an insurance man. So that looks understandably. But again, if you look at 2017 in terms of what the key issues were for Broad Street, do you think we now have a bit of stability in the financial services sector on our market where banks were no longer shedding number of staff as they were almost across board in 2016. Do you think we have the stability last year?
I think the system is much more stable, and then, of course, it was a learning point for most of the banks. Right now, banks are trying to deploy technology into some of the things, even though you may argue that this, will further increase the rate of unemployment, but banks have learned from the events of 2016, particularly in terms of how they deploy their assets into the risky sectors, the oil and gas, the power, general commerce,
telecoms.
And telecom sector. For the general commerce, for example, what majorly accounted for the drag that we saw was the FX issue which, faced the country. It's surprising when you analyze the contribution of the oil sector to GDP. For example, barely about 9%, I think about 8.9% or thereabout, But that 8.9% is very useful in determining what goes on, within the broader economy. So general commerce, which was a sector that affected the performance of most of the banks in 2016, is lumped under the service sector, trades generally, and FX is a key ingredient, for whatever happens within that sector. So, again, the economy is beginning to gain, traction, and FX issues are already dissipating, and we've seen rebound in activities going on. But the banks have learned that they have to take calculated risk when they are availing
That's the conversation. The big conversation in the room is still around credit.
Correct.
To the real economy. And
because that's what drives the economy, essentially.
Because if we do that, we're most likely to see more contribution of the financial services to the GDP, and in terms of their growth, really. Because if you're doing 2.84% of about $500 billion of a GDP, that's...
This is minute.
Under the table. No, that's not even under the table. That's not on top of the table. That's somewhere under the table. It's really, really small. So the central bank spent most of last year, and the MPC communique last year kept browbeating or kind of knock the banks, as it were. You're not lending to the real sector. You're not lending. We call the CRR. We call the ERA during the past central bank leadership.
Yep.
But we haven't seen that move into the real sector. So this GDP speaks to the fact that the economy, the private sector, is still needs that injection.
Well, yes, the central bank...
do you see this happening in 2018?
Well, we continue to see a lot of that, but like I mentioned, banks have to be much more calculated in whatever risk they want to take. So the CBN is encouraging, and saying that we'll make the environment conducive for you, But the banks still have because they have a regulator, But the banks still have board of directors who will decide that this is the line, this is the kind of risk we want to undertake. And from our own experience in the market, most of the banks are not just going to deploy funds into creating credit, because the regulator will always encourage. That's their own role, But the risk inherent in most of the sectors you want to create, talk about oil and gas, which is about the most juicy sector that anybody wants to invest in. There are inherent risks, So any bank that wants to create credit within the oil and gas sector, we have to go for a course in Harvard for about a year, to study the risk, to study the risk before they take any other calculation.
I'm not sure anyone in Harvard will be able to teach that. Even not at MIT, you would need that local experience. Final one, 1 minute, 60 seconds to wrap up this with you. Do you think Buhari's economy will normalize in 2018?
Well, I mean, the economy is gaining traction, from the activities that we're beginning to see within the private sector, But again, the agenda of government, it's something to talk about. We've seen a lot of improvements in terms of policy communication and policy documents that have been rolled out. ELGP is a fantastic one, but again, implementation remains key, So for as far as the government is able to follow this plan through, and the Federal Ministry of Finance, Budget and National Planning are working together in synergy to ensure that we don't have policies that are antithetical to each other, then we are likely going to see traction. But the concern for us is 2018 and 2019. We are moving into the election cycle, and that may slow down.
You're telling me, I'm in the news business, and I saw one of those meetings held yesterday, and that's making headlines as we speak, about the ruling party extending the tenure of this top echelon for another 1 year. That's quite strategic, isn't it?
Yeah, it is.
Yeah, you don't want to change your team close to the match. You want to make sure the winning team stays there. I don't know what that means in politics, but that's Omotunde for you. Thank you very much for coming, the head of research at Afrinvest.